Well, oil prices have been on a wild ride recently. I'm sure you've been tracking the latest in the Middle East, where there is hope that a ceasefire will ultimately result in fewer worries over things like disruption of flow of crude. And as a result, the price of oil today trading around 65, 66 bucks in New York after not that long ago being north of 75. And then there's also the production story with OPEC plus nations set to meet again this coming weekend. Rob Thummel is a senior portfolio manager at Tortoise Capital and joins us to talk a little bit about all the moving parts. Rob, it's great to have you with us. Boy, there's never a slow day in watching the oil market right now, but just walk us through where the market's thinking is today after everything that has unfolded for the last few weeks.
Yeah, no, that's a good question. And it changes by the minute. But probably where we are today, John, is simply this. It's obviously oil prices are down in 2025 from the start of the year, down to about $65, as you highlighted. If you think about what's the normal oil price, well, I don't know what normal is, but we think the oil prices should probably be in the 70s. So oil prices are probably below where they need to be. Why? Well, because the global oil market is really oversupplied. So OPEC Plus has added back oil production throughout the year, and the anticipation is that OPEC Plus will add back additional oil supply over the next several months, and so the oil market is currently oversupplied, and that ultimately means oil prices have come down and have been pushed down, and in order for oil prices to return to what we think is the 70s kind of normal price, you need the market to really rebalance, and what that means is either oil production in other locations is going to fall, or effectively, demand for oil is probably going to rise more than what people expect in the second half of the year.
So maybe you can walk us through that OPEC plus thinking. Now, correct me if I'm wrong, but I believe Saudi Arabia was looking at the situation playing out with the worries over war and trying to make sure if there were any disruptions, there would be plenty of oil flowing, which I believe they were able to execute on. But here we are, you hear about maybe there's uncertainty in terms of demand out of China, and yet OPEC Plus still on track for an output hike. But maybe you can walk us through what the thinking is in boosting production right now.
So prior to the conflict in the Middle East, with Israel and Iran, OPEC Plus and Saudi Arabia leading that charge was already increasing oil production. You say, well, why is that? Well, the Saudis and OPEC Plus had already signaled to the market that they had basically committed to a voluntary cut of production several years ago, and they were going to start bringing those volumes slowly back to the market. Why? Well, they do have access to a lot of data in Saudi Arabia because they are the largest supplier of oil to the world, to the rest of the world. As far as an export perspective or from an export perspective. So they were seeing demand, and they were also seeing the opportunity to bring back those volumes and elected to do so. Now, when the conflict and tensions escalated in the Middle East in particular, Iran was now thrown into the mix. Iran exports 1.5 million barrels a day of oil, about 1.5% of global oil consumption. If there would have been disruptions in Iran exports, then Saudi Arabia and other OPEC countries were prepared to step in and fill that supply gap that would potentially have materialized should Iran exports be less. And Saudi Arabia is still ready and willing to be able to do that. So we'll see how the second half really unfolds. We don't expect any disruptions in the Middle East because of the conflict. And so as a result of that, we continue to expect the oil market to be oversupplied in 2025. And we will then expect to see oil prices right around the $65 range where they are currently for the rest of the year.
Rob, we're almost out of time, but like a big trend story is where people are going to get their power sources. And when I say people, I also mean companies that are at the center of the AI boom. Before you joined us, we heard from an analyst who likes GE Vernova, for example. And you've got certain stocks that are at the center of the electricity boom stage that have seen their stocks surge. Meanwhile, you've got people who are long-term bulls on energy, sometimes feeling a little bit frustrated. But I guess if you're trying to figure out when it comes to long-term power demand and ultimately what will be serving that power demand, how does oil fit into that conversation, in your opinion?
Well, so electricity is the new oil. And so from our perspective, natural gas and nuclear are the future for the energy supply. Oil still plays a role, but it plays a lesser role. So natural gas and nuclear are ways to play it. Natural gas stocks, there's plenty of really high quality natural gas stocks in the US and Canada as well. And natural gas will really be the big supply source, energy supply source in the near term. And really in the medium term, nuclear will start picking up in terms of its market share, probably beyond in 2030 and beyond. So that's the way we look at it.